obviously the 101 of key concepts and fundamentals. If you have not yet, please begin discussion with your lender clients about what they will be needing from their settlement service providers in this kind of this new world. How do they want to handle the closing disclosure? Remember, our RESPA protected right to prepare the HUD-1 is no more, and so we need to reestablish a value, and that may be on a lender-by-lender basis. Will they want to prepare the closing disclosure form and deliver it completed to you? Obviously, you have some pieces of the transaction that are outside the loan that they would need that information. So how are you going to collaborate with them on that? Do they want to continue to do like they largely do today, which is deliver to you the loan information and you aggregate it all on the closing disclosure form? How are you going to share that information? And I'm going to give you a quick checklist here in a minute for those of you who like checklists. I'm a big fan because there's little more frustrating to me than knowing a big change is coming and not being able to take incremental steps right now. So that is another key incremental step. Let's also talk about how to talk with your software vendors. Here's a quick checklist for you to think about and some things to ask of them. How will you be able to, again, collaborate in producing that closing disclosure form with your lender customers? Are you going to be manually keying? Is there going to be a shared portal? Will there be an integration with their loan origination system? So how do you perceive your abilities? Are they multiple? Are they singular? What do they look like so that you can operationally plan for that? Another key thing, and I can't understate your ability to have preparedness on this now. You have many things in your systems right now that key off of those HUD-1 existing section numbers and line numbers that you use in your business beyond just disclosing them on the HUD-1. You run remittance reports. You run income projections. You may run compensation models. You may run a lot of things of reports that are keying off of line numbers in the HUD-1. So some things you need to think about aside from the form itself. Are you going to need to redo your invoicing? Yes, probably. Those probably key off of HUD-1 line numbers. How about premiums and rates? I guarantee you that will change as well in addition to the form itself. Again, what kind of reports are you generating that are pulling from HUD-1 line information? Also, what other documents do you produce that reference HUD-1 line numbers, that pull off of those HUD-1 line numbers? A good thing to be doing today is starting to gather a list of what all of those things are so that you can understand all the layers of change you're going to need to do beyond the HUD-1. The CFPB had a great luxury. They had essentially a white sheet of paper to start with, and they did a very good job with that. We have the added burden of legacy systems inside legacy businesses that we also have to retune to this. Cynthia mentioned, how are you going to handle the 3-day delivery and or presentation? You need to be thinking about that. Also, how are you going to monitor and meet your new scheduling requirements? Are you still doing manual paper schedule book? Do you have an electronic scheduler? Do you have a workflow dashboard? Are you able to monitor things at an individual task level and manage them? Just what are the pieces of that? If you have an expanded closing calendar, which you will, because you're going to have 3 days before with closing disclosure, you'll have closing consummation day. And in the world of refinance, you'll still have the 3-day right of rescission. So that just expanded. So where do you have opportunities to make that better? We talked about staff training on the form itself when your software does come to that level. You need to understand what your software provider's anticipated release date is for the closing disclosure form. So what you're trying to get at there is, when will I be able to get my staff's hands on it so we can start that line-by-line entry and start updating the rest of our reports and documents and invoices and all of that. Is there other functionality that you've been wanting, but you just didn't make it a priority. If this is an evaluation time for your software, what else do you need it to be doing that it's not? Do you need brush-up software training for your newer staff? This is just a really good time to assess all of that so that you can take care of some of those easier things beforehand, so you're not trying to do all of that once you finally get your hands on the form. Excuse me, how much is the upgrade for the Respatila stuff going to cost you? How do you budget that? What is their policy? What is their plan on that? You need to know because you need to be budgeting for that and preparing for that. And are you going to need to make any additional hardware or infrastructure investments? Do you have anything that needs to be retired? Is this a time to look at cloud-based solutions? If you look at that, what are the trade-offs if you move to a cloud or upgrade physical equipment if you need to, versus what are the advantages? So now is the great time to be doing some of that assessment, excuse me, so that when it is time to learn the nuts and bolts of line by line of the form, you've gotten all of these prerequisites out of the way, and you've budgeted, and you have operational preparedness. Very quickly, too, this is kind of a really dorky thing, and I don't want to turn you all into propeller heads today, but what we need you to understand is when you're talking about multiple loan origination systems needing to communicate with multiple title and settlement softwares, there has to be a uniform language. If you're going to route information, it needs a common address for a field. What is the flood certificate called, and where does it go? That is what is being referred to as the uniform closing data set. This is the how we're going to get cross industries working together and speaking the same language. So Fannie and Freddie have banded together to make a uniform language to tell everyone where to map the data apples to apples so everybody can play battleship with the same coordinates essentially. You do not need to be overly participating in this. What you need to do is keep an eye and an ear on it, and when you see something that sounds really confounding, like uniform closing data set, I don't know what that is, just be conversant enough, aware on it to monitor the progress and know that your system will need to be UCD, uniform closing data set, aware and compliant. So let the geeks take care of that for you. Just know what it is and how it applies to you.
All right, I'll jump in on this last one of the last slides here, and what's next. Again, just a few things to mention here. Obviously, the task force will continue its work, and we will be dialoguing with the CFPB and other partners as we try to improve the rule. And from that standpoint, it's important for us through ALTA to receive concerns and questions that might arise as you all start to study this rule and its impact upon your operations. ALTA will also be developing education and training materials. There'll be additional webinars. There'll be other resources that will be provided and for your continued education on the important topics that are at hand here. The CFPB also intends to provide guides to aid the completion of the forms and compliance. I would direct your attention to one of the guides that just came out. It's called the Small Entity Compliance Guide, and there's some links and so forth that we can provide. But if you wanted to just Google TILA RESPA Compliance Guide, it should get you to that basically it's about 60 or I think it's about 80 pages long. It's fairly easy read, and it answers some common questions, and I would recommend that all of you look at it. Next slide. I guess it's time for questions.
Yeah. All right, Dan, and also the CFPB education material. You can go to Consumer Finance. I don't have their website memorized yet. Does anyone have it off the top of their head? Consumerfinance.org, and you can go.
Yeah, I think it's consumerfinance.gov.
.gov, right? And also, though, you can get all of their material on our website as well. There's on your screen, alta.org/CFPB, and it also has the the guide that Dan just mentioned that's posted there. So we're going to turn to a few questions. We had a lot come in over the past hour and a half. I'll just kind of pitch them to the speakers here. If you guys, if you want to jump in, I've got a couple on the loan estimate, and as we expected, a lot on the closing disclosure. David wanted to know what bucket do title fees fall in where the buyer does not select the title company. Would that be the zero tolerance?
Where the buyer did not select the title company?
Yeah.
So if the lender essentially required the use of the title company, that is correct. It's either, if it's an affiliate of the lender, it would be in the 0%, or if they did not allow the borrower to shop. If they allowed the borrower to shop, but it was on the provider list, that would be 10%. And if the creditor had no vote in the matter, then it could be in the wide open bucket.
Okay. That kind of led into another question. So someone wanted to know, and I didn't write down her name, how do you get on the provider list? Any suggestions for that?
Talk to your lenders.
Good advice. That's essentially it. Work with your lenders and prove your value, right?
And, really that goes back to the same way when we started talking about being on provider lists in 2010. The conversation back then was, do you actually want to be on the provider list? Do you want to be subject to the 10%? Do you not? I think you just got to talk to your local lenders and see whether or not they're going to promulgate lists locally, whether they're going to promulgate them nationally, and see what you can do to get on it.
Okay.
Yeah, and I would just make another observation in that regard. I mean, don't wait till this thing is a fire drill closer to the August 1, 2015 deadline. I think it's really important to start these discussions now. And if you approach your lender customers, you might find that you know more than they do at this point in time about this rule. And they might turn to you as their expert when they have questions, and then that would enhance the likelihood that they would continue to use you as this rule moves forward.
Okay.
I would say there's no doubt, at least from my experience, there's no doubt that right now you know more about anybody in your local area. There may be folks up at the national who are paying a lot of attention to this, but all of my local contacts, they have been consumed with other compliance and regulatory situations, and we're starting to offer ourselves out, and they say, great, we can't wait to talk to you when we need that. So go ahead and get in front of them now.
Okay. Yep, good advice. One more on the loan estimate, and had a few come in asking about the fees themselves. They noticed that they were rounded and there were no cents. Is that how the forms will be used? Will there be no cents inputted? And I mean cents as in C-E-N-T-S.
Oh, you mean C-E-N-T-S?
Yes.
I was going to just have to abstain if it was the other. I believe we will have cents. I think that these, obviously in prorations and the like, I think they were just not disclosed in the example forms.
Okay. All right. Try and get a few more in here before we call it quits for the day. Had a lot of questions come in about the use of the closing disclosure on cash closings. Anyone want to jump in? I believe they can be, but they could probably still use the HUD-1 on cash closings, correct?
Oh,
right.
Yes,
there's no requirement of you. Yeah. Go ahead. I'm sorry.
No, that's fine. I was just going to point out that, when you think about this, for a time period, you're going to have two systems running, because it's applications that happen on August 1 of 2015, and so your closings may be delayed using the new forms as much as a month or more. And during that time period, you're going to use your existing approaches. And but you got to look at what is covered by the rule, and matters that are not covered, there's no mandate to use these forms.
Well, and in fact, reverse mortgages, I think there is a mandate that you still have to use the GFE and HUD-1. So if you're doing those types of transactions, you will, and I think Mary can jump in here, but I think all the software providers have said there will be the ability always to merge out or print off the various types of forms, because you will have we'll have various types of transactions that
correct, and that is one of the key questions for the provider. How many versions of a closing form will you have? I believe the correct answer would be at least 3. So I think you need the 1974 HUD, the 2010 HUD one, as you said, not only for if you need to recreate historical closings, but also for the types of loan transactions that are exempted from the closing disclosure form. Exactly. Also the closing disclosure form, and then for truly cash and or commercial and or a disbursement worksheet, also just a plain debit and credit form that is sort of the lesser version of the 1974 HUD. So I think the correct answer for that needs to be in perpetuity, a minimum of 3 forms.
Wow. Fun times, right? Again, we'll try and squeeze in a couple more. Dan, I had a question about delivery, and they wanted to know about the option to email. Could you or maybe someone else touch on emailing the closing disclosure to the buyer?
Well, you can certainly use email as a delivery mechanism. I assume the question is, what does that constitute? Is that viewed as an immediate delivery? There's basically there's 2 types of deliveries. One is your confirmed receipt, and the other is basically presumed to have the additional 3 days for mailing. And as to the using the technology approach, you're going to have to establish receipt in order to avoid that additional tacking of the 3-day additional presumed mailing time period onto that 3-day time period. And I'll turn to our tech expert to get into the the specifics on that email aspect. And Mary, maybe you can add more on that.
I can. I would absolutely encourage settlement agents to make that part of their discussion with lenders today, because understand, if that is a service you offer to provide on their behalf, you're going to have to give a lot of assurances and a lot of accountability because it's their responsibility for the timing, the correct email address. They most likely have some sort of electronic authorization in their file from the borrower that's going to instruct what email address to use. And so while I think it is a very compelling and competitive service to offer, you need to really define that out with each lender, what you're able to offer and what additionally they might require, so that you can give them the proper level of assurance that goes with all of the liability around how and when the closing disclosure is received by whom.
Okay. Thanks, Mary. A couple more questions. I think our webinar platform is getting tired. I'm getting a little bit of feedback on my end. So, had a couple of questions come in asking about consummation. Ben, if you're still there, I'm not sure if you are, but or maybe someone else could step in and explain, what is the CFPB's view of consummation? What does that mean?
Well, consummation. Go ahead.
Well, I was going to say that consummation is not the same as closing. The consummation is the date on which the borrower, consumer, becomes obligated to the creditor. So for states, presumably that are escrow states or states where that could be a different date from the closing, the consummation is that date on which the creditor, the borrower is obligated to the creditor.
Okay. All right. Thanks, Cynthia. And one more to kind of wrap up, and it kind of involves the closing disclosure in ALTA's best practices. And since the closing disclosure may be completed by both the lender and the settlement agent, meaning might be sending non-public personal information back and forth. Does this make it even more important for settlement agents to implement the best practices and have the technology in place to show that you can protect this data?
Absolutely.
I'll touch on that real.
Sorry.
Well, I just wanted to make one observation, and then I'll let you finish. You know, one thing that I've noticed, and this is something that wasn't on a slide, is that there seems to be some confusion out there in relation to best practices and the implementation date here. Those are separate and distinct. So the August 1, 2015 implementation date is tied to the Integrated Mortgage Disclosure Rule. There is not a set implementation date for essentially the service provider bulletin requirements that came out to lenders back on April 13th of 2012. Those are separate tracks. So it's incumbent upon all of the title industry to make sure that we adopt the best practices throughout our industry. And of course, an important component of that is the treatment of this private information. And I'll turn it back over to Cynthia.
Oh, sorry, this is Mary. I'll just jump in and add that I consider best practices a prerequisite for this, although I obviously that's informal. But again, when you look at all of these changes that we need to adopt, to try to do them all at once, it just would be so burdensome. And compliance with best practices is going to be a continual journey. There really won't be a sit back, you're done forever and ever. But things like if you do want to offer delivery of the closing disclosure form to your lenders, yeah, there are questions about are you emailing it out encrypted? If you have a collaborative web portal that you're using, is it SSL required? There are things like that. Again, not to get too weedy, but if you try to bite all of these things off all at one time, you will not be successful. So absolutely use this time period to embrace and adopt the best practices, and really hold yourself out as a service provider who is meeting all of the requirements and certifications and voluntary standings to prove that you are that viable, responsible partner.
That's a great point, Mary.
Yeah, thanks, Mary, for that explanation. I think we're going to call it a wrap for today. If we didn't get your question, please go to our website, alta.org/CFPB. You'll see a box there. You can submit your questions there, and we'll get Steve Gottheim, our legislative counsel, tackling all of your questions. He doesn't know that, but they'll be coming to him. Also, if you missed parts of today's webinar, or if you think others in your office would benefit from listening, as I mentioned, today the webinar was recorded. It will be available for replay early next week. Again, also on our website at //CFPB. And looking ahead, our next webinar will be on June 11th, and we'll have Mark Fleming, CoreLogic's chief economist, and he will be talking about the mortgage market and what influence the qualified mortgage rule is or may be having on credit access. And this will be a pretty timely webinar, as the MBA just today cut its 2014 loan origination forecast to just over $1 trillion. So with that will bring us to the conclusion of today's presentation. Cynthia, Mary, Ben, and Dan, thanks again for joining us. And I hope all the listeners found today's presentation useful. Take care, everyone.